What's up everyone, this is Kenny here from Profit Stories. So today is the launch of EPF account 3, which is known as the flexible account. Yeah, some of the features that is for account 3, I think all of us by now we know what are the features already. Can withdraw anytime, minimum 50, only less than 55 years old will have. The split portion is 75 for account 1, 15% for account 2 and 10% for account 3, okay? So the account will be renamed as account 1 retirement, account 2 is well-being account, account 3 is flexible account. What actually interests me, this part is the dividends. So far, the EPF said the dividends across all 3 accounts is the same. The dividend rate is the same. It's still calculated daily, okay? And being from the bank, I can't help but think how the bank will take this as what has this development. Maybe you can take as your savings to proof of savings when you apply for a mortgage, okay? So the current practice, right, from my experience, when you apply for a mortgage, the bank always, not always, most of the time will ask for savings. The savings, how much? 10% of the property price. Yes, I know when you buy for developer, you don't need to come out 10%. You don't need to come out because you got rebate, you got discount. Most of the time got rebate. But to the bank, you are buying at a S&P price without any discount or rebate. That is the S&P price, okay? You understand what I mean? So what you usually do in the banks, they will take the account 2 portion, because account 2 is the one that you can withdraw when you buy a house. When you buy a house, you use account 2 to withdraw for the part of the to form part of the 10%, right? So if let's just say account 2 got 20k, then it's 20k base 20k for your savings. The house is 500k, so you still got balance 30k, right? So balance 30k, where you find you need to show your shares, your savings account. Shares are, frankly speaking, very very little taken, and most of them not taken at all for savings. Shares are, mutual funds are not taken, even overseas stock are not taken, okay? Even like crypto, banks are very conservative. Until now, I don't think they still accept crypto, even though you put at the registered exchange. Malaysian registered exchange also no, because of the nature of the volatility. So the best is cash and fixed deposit, okay? So indeed, cash is king in this case. Cash is king, okay? So you need another 30,000, you find somewhere else. Then when you put in, that is a proof of savings. It doesn't mean that you need to put the money with the bank. There's no condition that just to show the bank. Then they will approve. So sometimes the banks is actually will say that, okay, we will take the whole account, EPF account, if you are close to 55 years old. Sometimes you get whether the son or daughter join name with the parent, then the parent EPF account is taken into account for the application for the savings part. But if you, in this case, right, if you have the child and the parent join name, then the parent's age doesn't matter, doesn't really matter, okay? I think as long as you do not exceed 65 for the parent's age, because you still need to be working. You still need to be working. Then this kind of case, right, the EPF will be taken as whole. Sure, will be more than 50,000 most of the time. Okay. The next one is that they will say, if you yourself, you alone, and you are not 55, they will only take account 2, because account 1 you can only withdraw when you're 55. You want to buy a house, not logic I take into account savings to approve your loan, because that savings is just to show that you can actually support the loan. Let's just say today you lose your job, how long can you support? You got 10% to support the payment, that's it. What that savings actually shows a lot of your habits, whether you know how to manage money or not. Okay, that's why the bank is asking. So that is the practice. With this account 3, right, having it, since they know they can withdraw anytime they want, I wonder if the bank will accept whatever you put in account 3 as liquid, much like a savings account or current account or fixed deposit. I wonder. That I hope they do, because it will definitely give you more liquidity in the application. And for high net worth individual application, net worth, okay, high net worth individual application, high net worth here meaning that asset minus liability must be more than 1 million. And this asset minus liability, actually asset includes the EPF. Most banks, they include EPF. In this case, right, they will usually take the whole EPF. Most of the banks are quite conservative. When it comes to high net worth, they will take the second account. Second account until you are like more than 55, then you can withdraw your EPF, right? So if you join in with your child, then yes, you take the whole thing. So high net worth, maybe they are more comfortable to take the whole EPF as a support to support the savings, because now at least they know that the portion to account 1 and account 2 is a bit lesser, so they still have the liquid asset for account 3. So this one also can be used for high net worth calculation. Instead of 1 account can use, last time account 2 only, now can use 2 and 3. So it should be okay, and it should be more lenient. I don't know how the bank will look like. I think we need to address the elephant in the room. If EPF 1 year give like 6%, why would we put our money in the savings account? Why not? Why put in FD? Why not put in EPF? Yeah, you can actually consider putting in the EPF. Voluntary, you can put in, because the dividends are the same across the board. One thing that I don't know, I'm not sure, is they say withdrawal is fast, right? I don't know how fast is fast. If it's like 3 days or even like maybe 5 working days are still okay. If withdrawal fast and then don't know how long you need to wait for approval, that one is not fast already. So they do not have indication for this, but if you have an extra money, you might want to consider putting into EPF. Safe and also give you the high returns, 5 to 6% per annum, which is good. So the next question I think you have is that, can I put everything into account 3? The answer is no. You can, once you put the account 3, right, you can put however much you want into account 3, but they will always be split into 3 accounts according to the portion that I mentioned just now. 75% for account 1, 15% for account 2, and 10% for account 3, which is, frankly speaking, not have some money that you want to save for retirement. EPF is one of the best vehicles. Okay, I think that's all for now. A lot of people have been covering the technicalities. I think you can just go and check out the technicalities, and I'll maybe leave some links to articles that I find that is interesting, FAQs. By now everything is done. I'm just waiting for how long it takes to withdraw only. Let's just say this year you want to buy a house. I would recommend that you do not take the money out from account 3. You can have account 3. For me, it's a very good emergency standby. But if I want to buy a house or buy any big ticket items, I will just let the account 3 be there. I don't have to withdraw. Okay, it's good to have anyway. Can you transfer back to account 2? Yes, you can. But if I want to buy a house, I can withdraw from 2 and 3 together. I can withdraw from 2. Just leave it till you are ready to put down payment for the house. Okay? So I think that's it. This is Kenny here from Property Stories, and I'll see you again next video. Bye-bye.